A warm welcome to the Morning Outlook by Kalkine TV. I'm Sage. A weaker start to the Australian share markets indicated this morning, with SPI futures being down 55 points or 0.78%. A sell-off was experienced on Wall Street overnight as the investors await the CPI data Friday morning. And so far this week, the ASX 200 has sunk 3%, according to CNN Business. About $7 trillion of stock market value was wiped out since the beginning of this year. There are signs that inflation may have peaked in the US, with the current reading being 8.3%. There is a possibility that inflation will ease for the next month to 8.2%. Due to reports, the core inflation rate has risen by 0.5%. The Dow Jones index was down by the close, sinking 638 points or 1.2% in the US, with the mass sell-off in the closing session causing the S&P 500 losses to more than double. And the S&P 500 index shed 2.4% to 4,017.82, with the NASDAQ index decreasing by 332 points or 2.8% to 11,754.23. 9 of the 12 sectors were in the red, with the energy sector leading the gains, being up 27.97%, followed by utilities being up also 4.83%. The biggest laggards was consumer durables, down 11.97%, and electronic technology down as well, 8.42%. Alibaba Group Holding Limited, Wells Fargo and Co, Boeing Co, Bank of America and Walt Disney is where the volume of traders were all being down, however, with Alibaba leading the losses, being down 8.63%. Other notable losers were the cruise companies Carnival Corp, Norwegian Cruise Line Holdings Limited and Royal Caribbean Cruises, all down 9.05%, 9.17% and 8.29% respectively. In the US Treasury yields, they were shaky after rising. The 10-year Treasury yield rose as high as 3.09% before retreating to 3.04%. On Wednesday, they were at 3.02%. Big swings are to be expected in the markets during periods of uncertainty, as we are experiencing, with global Federal Reserves taking a more hawkish stance and having the reduction of inflation as their top priority. The S&P 500 remains down 15.7% for the year so far. In Australia, the economy is still experiencing the shockwaves from the surprise RBA announcement to increase the target cash rate by 50 basis points. Before the COVID pandemic downturn, 0.75% was the cash rate, and with the new changes, the cash rate's now reaching pre-pandemic levels. The Reserve Bank or RBA board put in place a 0.50% increase, making the current rate 0.85%. Australia is witnessing the steepest increase in interest rates in 22 years, the most recent being the first time since May of 2010 that a back-to-back rate hike has been put into play. And the RBA was quoted saying it is committed to doing what is necessary to ensure that inflation in Australia returns to target over time. Their focus is reducing inflation to be at 2 to 3% targets. And the RBA expects that if banks and lenders apply the new cash rate of 50 basis points, it could add $6 billion to households, with a boost for retirees especially. Since the pandemic began, many households who kept their jobs have been able to save money with no travel, hospitality or entertainment open. This was indicated by household deposits rising 28% or $280 billion in the last 2 years. Over to the European markets, and following suit, the European stocks also sank following the European Central Bank's hawkish announcement. French stocks inched down slightly pre the announcement, however, and after the announcement, the CAC 40 index dipped 1.4%. Germany's DAX also shed 1.7%. The ECB's Governing Council will meet to make decisions based on monetary policy. It's expected that in order to prepare for July's rate increases to curb inflation, the ECB will complete in the coming weeks of June its net asset purchase program. And last week, the Europeans were hit with the news of the Eurozone Consumer Price Index reading at 8.1%, which is higher than anticipated. At this stage, until the asset purchase is complete, rate hikes are not to be expected, with Europe having been in the zone of negative interest rates since 2014. The ECB's policy rate is currently at negative 0.5%, and analysts are pricing in almost a 1.25% of rate hikes by the end of 2022. In the Asian markets, the Japan Nikkei 25 was up 0.04% to reach 28,246.53, and Hong Kong's Hang Seng was down 0.66% to 21,869.05. In the global oil market, last week OPEC Plus decided to increase oil supplies at a faster rate over the Northern Hemisphere's summer months. However, not much is expected to change from this. In the preceding months, there is evidence that OPEC Plus has not been maintaining its production targets, with global oil supplies lagging by almost 2.6 million barrels a day. Increased demand with limited supply is impacting the price of oil, with many analysts expecting it to go parabolic this year, with the energy sector holding on tightly to its gains on Wednesday, which saw it end the session as a sole winner in the S&P 500, boasting gains for WTI to reach a 13-week high, reaching above $122 a barrel. US gasoline stockpiles, however, declined for the 10th straight week as motorists continue to experience inflated prices at the pump. ExxonMobil reached an all-time high, being the first time since 2014, with Chevron and Valero also clocking in gains in similar territories. The global oil prices fell by around 0.5% on Thursday. Although Shanghai may be entering another lockdown earlier in the day's trade, news of Chinese exports improving, being up 16.9% for May, boosted the economy and the fastest pace since January, and double the analysts' forecasts as well. The Brent crude price fell by US 51 cents or 0.4% to US $123.07 a barrel. The gold futures price was down by $3 US 70 cents or 0.2% to reach $1,852 US dollars 80 cents an ounce, and spot gold traded near $1,847 US dollars an ounce at the US close. The iron ore futures price fell by $2.06 US or 1.4% to $143 US dollars 82 cents a tonne. Apple released their plans to offer a BNPL service at its Worldwide Developers Conference at the start of this week. And this new pay later arrangement program will operate through a subsidiary called Apple Financing, LLC, which has a state regulator's lending licence, making Apple now somewhat of a bank. But whether they go through the stringent and document-heavy process to get a banking licence is still unknown. Its new offerings will enable Apple to handle credit checks, lending and underwriting, with Apple to continue to use existing financial outsourced operations for now. ExxonMobil's share price 12 months ago was close to $63. Now it's increased close to 61% to reach an all-time high of about $140 just yesterday. And just 2 years ago, the stock was removed from the Dow Jones Industrial Average after a 92-year long listing in the blue chip index due to investor concerns on the future of fossil fuels companies with high debt. If oil prices continue to march higher, shares of ExxonMobil and the energy sector may follow, and Goldman Sachs' expectations are that global oil prices could average $140 a barrel between July and September 2022. This is an increased forecast from the previous $125 per barrel. However, they are concerned that the extra pressure on the oil sector that we're witnessing could lead to higher operating costs, taxes, expenditure in the way of debt and deflation of gas prices as well. And although the near future is on the upside for the oil companies, there may be these other factors to keep in focus as well. So thank you so much for joining us on that report. Hopefully you found it informative. We are approaching a long weekend here in Sydney. Hopefully you've got some big plans and the weather's looking great. So hope your day in trading goes well, and we'll see you when we get back. Sage signing off.